Good afternoon. This is Mark Sebastian, founder of OptionPit.com, and this is the Option Pit trade idea of the week. Welcome back, everybody. It's good to see everybody. I just came off a really spectacular course at the CBOE Risk Management Conference. Before I go too much further, I'll remind everybody that this is for educational purposes only. None of this for you considered investment advice. Consult your financial professional. If you lose money, it is your fault. The CBOE Risk Management Conference was great. Learned a lot about volatility, a lot of cool stuff. If you've not been, it's absolutely worth going. Just real briefly on our blog, we've done some. We've been pushing out a lot of interesting content involving, transportation sector and UVXY and some of the VIX levels. So. One of the things I did notice is that VIX is actually up today, even with VIX down and the VIX futures down. That's interesting. I mean, why is that happening? Well, I think we're finally at a level where we're starting to see some bottom feeders, some people willing to buy volatility premium. Some people think that maybe we're at a point where VIX might start to catch a bid. I mean, if you take a look, we've got the Fed announcement coming up. We've got lots of other stuff going on. So as I examine kind of the overall market and I look at where things are and where trading is, there is some inexpensive option premium out there. So the VIX is 16. And if I pull up the VIX futures, the March future that expires on the 16th is around 1830. All right. So that's a decent contango. I mean, a really decent contango, about 2 points. So I like the, so I'm just messing around with a little trade here, but I like owning calls as a potential trade for something to rally. I think that maybe not a huge rally, but I think there's a real opportunity for us to see volatility increase a little bit. And so I think that we could see VIX move to 17.5, 18, especially out of the Fed, and volatility could catch a little bit of a bid. And you can see volatility if I pull up a chart of VVIX. If I pull up a chart of VIX, you can see it's low. It's an IV30, which is pretty similar to VVIX, is also low. At about 78. That's lowest in the last 3 months, lowest in the last 6 months, and relatively low even for where we've been over a year. So the market's saying, hey, volatility premium is not crazy expensive. Maybe it makes sense to try and go long. So a trade I might look at if I was a pro would be maybe the 17-19 1x2 call spread. Short one, well, the 17 calls at 75 and then pay 80 for the 19 calls. And that would be a 15-cent credit for a back spready trade. Since I want to keep things simple here, though, I want to look at kind of the fact that the market is, in fact, relatively inexpensive and that we are seeing buyers of premium. And so I might bid, my trade, I would probably work to pay 115 for some of the March 18 calls. Or I might, and this is a less expensive bet, I might pay, I could pay 80 on the March 19s. And I'm just going to go that route for now. I'm going to buy a March 19 call for 80 cents. And it may take a second, but I think I'll get a fill here. It's not like there's a lot of traders buying up this volatility premium. And there you have it. I have paid 80 cents for the March 19 calls, and that is a trade that I think could win if the vol futures even catch a little bit. All right, and then and I'm not saying that we're going way lower, but a little reset back down 30, 35 points would not be entirely surprising at this point. All right, folks, on that note, if you've got questions about our services, you can obviously go to our website. We've got lots of information about Option Pit here. You can really find everything you need to know. Go to mentoring and services, or you can look at our store if you want to learn a lot about VIX and some of the other things that we offer. And on that note, if you got questions, you can email me, mark@optionpit.com. You can call me 888-TRADE-01. Have a great day, folks, and I will talk to you soon.